And we're also in a weird time where there's a lot of just denying reality, right? Like everything we're talking about here on the show today is the reality of the numbers, the
Correct.
national debt, the consumer debt, the auto debt, the mortgage debt, the inflation, the wars, the funding of wars, the open borders. I mean, these are all bad things for you and me, the American, or if you're not in America, just you, the citizen, right? You the individual, right? A lot of this is not going to be good for our families long term. Now, as far as defense, I'm always a big believer. You are as well. I think when we met in the financial services space many, many years ago at a conference. We got instilled in us when we were in that financial education space, Aaron, which I'm thankful for this day that we did. We got a couple things instilled in us that have stood the test of time to this day for us in 2024. And the first two are gold and silver. Just tried and true hard commodity assets that we've always owned. I always have owned physical gold and silver, and I also own them on the exchanges as well. There's exchange traded funds like mutual funds for gold and silver where they actually hold the spot price of gold and silver. But check this out right here. I brought this up as well. I think we talked about this earlier. Look at the chart of gold. Can you see that now? There we go. So here's gold. Here's gold all time, right? Gold has hit an all-time high of 2,500-ish. Where did it go last week?
2409.
2428 looks like it's the high or something like that. I think that's the closing high, right? So gold is at an all-time high. Gold is up 500% here all time. The stock market looks exactly like this. So if you put the stock market side by side with gold, they would look very similar.
Except the returns on even the S&P 500 are exponentially higher than 517% in that window.
For sure. Absolutely.
Right. But the one thing that I think is really interesting to talk about is when it comes to gold is, yes, the price is up in gold, but gold is a hedge. It's a value hedge.
That's right. Gold
so if you actually look at what is the average house price in the United States right now, let's just say it's $500,000. Okay. It costs the same amount of ounces of gold to buy the average house today as it did 50 years ago. It was 150 ounces of gold.
Keeps up with inflation.
Correct. It's a storage of value.
Right.
And so buying up gold on a consistent basis stores value because the dollar keeps getting printed and its value goes down. It was 150 ounces of gold 50 years ago to buy a house. It's 150 ounces of gold today to buy a house. Gold holds its value. So we've been big buyers of physical gold and silver for a long time.
Right. Exactly right. So gold and silver, and people like, oh, wow, how do you do that? Right. There's a million dealers out there in which you can buy pure gold and silver. Now, you can also not take possession of it, and you can buy them on the stock market in the form of exchange-traded funds and mutual funds that hold gold and silver, or even hold gold and silver mining. So that's one as well. Bitcoin is becoming enormous now. So that's one of my topics for today. Just last month, Aaron, July 2024, here it is, August 7, 2024, JP Morgan Stanley Chase, I should say, not JP Morgan. Morgan Stanley Chase is now in the crypto game, which means they now have access to ETFs, and they just made an announcement last week that they are going to unleash, their words, their full suite of advisors to be able to now offer crypto exchange-traded funds. So when I say exchange-traded funds, basically like mutual funds, right?
Yep.
Just different structure, but same concept. Now crypto, Bitcoin, Ethereum, some of the big crypto names, they're now offered in the same way mutual funds are offered on Wall Street. So that gets my attention because, again, follow the money.
Yep.
Institutional money is now becoming buyers of Bitcoin, crypto, creating ETFs, pools of crypto, et cetera. So that gets my attention. Now, big institutions have always bought gold and silver as a hedge. They've always taken possession of it. The United States government has a lot of gold and silver. Russia has a lot of gold and silver. China has a lot of gold and silver physically in vaults, right? So a lot of analysts are predicting that Bitcoin could start to become the digital gold, the digital hedge against these forces that we're talking about right here today. So that's something that you want to look at. And this is something that Bitcoin can be bought. You could buy $1 worth. You could buy $100,000 worth. There's no limitations. You go to Coinbase or a platform like that, and you can buy Bitcoin and Ethereum direct. So I chip away at Bitcoin, and I have for years. I don't have a ton of it, but I have it as a hedge. I don't have a ton of gold and silver, but I have it as a hedge. So when times like these hit, I still have some exposure to the stock market, mainly with managed funds and indexes and things like that, and a little bit of trading that I do on the side. I don't really feel terrible because my gold and silver and Bitcoin and things like that and some of the hedges I have do very, very well right now. So
It's
you have
true.
to be able to you have to be able to play both sides. I don't think you should get out there and try to time it and trade it. But having these hedged positions like gold, silver, now Bitcoin, which I think has tanked to about 50,000. Aaron, some of the predictions I'm seeing right now, that just happens to be one of the areas I'm studying most in finance, is just Bitcoin. I'm seeing guys like Kiyosaki going all in on Bitcoin and building their networks and communities around Bitcoin. I'm seeing Tony Robbins and some of the big financial names. I just mentioned Morgan Stanley. They're now buying from an institutional standpoint. That should get your attention, right? It isn't fly by night anymore. It's now becoming a staple asset and a digital asset. And I predictions I'm seeing is that Bitcoin could be 100,000 plus by 2024, 2025. It's 50,000 right now. That's a 100% return.
I agree.
We have a good
And
friend, Mike Dillard, who really has probably got me down this path more than anybody. Who I think is as heavily invested in it as anyone I know, and who thinks that the whole financial future resides on blockchain and in the crypto space.
and I think that the other thing that's maybe overly simplified in people's minds is, Andrew, you know that I hold a small real estate portfolio, vacation rentals. Oddly enough, those vacation rentals have seemed pretty stable, pretty resistant to downward pressures, because people who can afford to go on vacation still go on vacation because they're not impacted as much as anybody else.
Right.
And I had a lot of people make fun of me in the investing space when I told them I don't have any mortgages on them. They said, "Oh my goodness, well then you need to go out immediately and leverage them and buy 3 or 4 more. And don't you understand the cash flow covering the base and the mortgage?"
Well,
and
there's an argument for good debt there too.
Yeah, there's an argument for good debt, but I felt like it was more important to me to have stability and to have this untouchable asset than it was to, try to build it in some massive empire. Well, I can tell you those
You didn't
same
want to
people.
get too. It sounds like you just personally didn't want to get too leveraged.
I just personally didn't want to get too leveraged, is really what it
fair.
comes down to. And those same people that made fun of me 4 years ago are telling me I'm a freaking
that was
genius.
a smart move, buddy.
What a genius you are right now.
Yeah.
I have a good friend who has a financial services company. 3 months ago, he moved all of his clients into treasury bills, and everybody said, "Are you insane? The market's going crazy right now." And he said, "I can see something coming." And all of a sudden right now, all of his clients are saying, "Oh my God, you're a genius," right? So sometimes that counterintuitive approach is important. And I know that if you want to get to massive, massive amounts of wealth, I don't mean like upper middle class. I don't mean the high net worth individual category. I mean massive, massive levels of wealth. You really have to understand the debt game, and you've got to leverage debt at a very high level to get that. I'm not trying to play that game. I'm trying to play
you're more conservative. You're more personal, right? This is more of a wealth builder for you, not an empire build for you, which makes perfect sense. It just depends on your goals. It's like fitness. It depends on your goals. Hey, should I lift this amount of weight or this amount of weight? Well, it depends on your goals. It's the same kind of thing.